Hi, my name is Tim Dial, and I am with Nexa Mortgage. I'm actually the managing broker of Extreme Lending and powered by Nexa Mortgage. We're actually located out of Murfreesboro, Tennessee, but we're licensed in multiple states, and we do a lot of business within a lot of different states surrounding us. So, we're in Tennessee, we're in Kentucky, Indiana, Michigan, Illinois. We're also in Georgia and Florida. So we do have a lot of states that we cover, and we have, because we're a broker, we have over 200 lenders, and we have a lot of different programs available for the different states, the different programs that are out there. The reason I'm putting this video together today is to go over some more specifics regarding down payment assistance. I've covered down payment assistance previously as well, but it is becoming so important because so many people need it right now. A lot of people have credit cards that have higher balances on them. They have less money in the bank, but they'd still like to be able to buy a house, and they're trying to figure out a way to do that without having a lot of money in the bank. So I wanted to kind of cover this in short order here. It shouldn't take very long for me to go through it. So let me get right into it. First of all, most down payment assistance programs do have income limits. So they do require that you don't make too much money. They feel like if you're making enough money, then why don't you save some money for the down payment? However, we do have a couple of programs that are very specific programs for those people that where we can offer down payment assistance to people who make a lot of money that don't have any income limits. So there are a couple of possibilities like that. Because we have over 200 lenders, we have, there are over a dozen down payment assistance programs that we can utilize. So it gives us a lot of options. But anyway, the way down payment assistance normally works is that you're using FHA or utilizing FHA for the program itself. FHA normally requires 3.5% for the down payment, and down payment assistance, what they do is they provide that 3.5% to you, and they put a second mortgage on the house, and you pay that second mortgage back over 10 to 15 years rather than having to pay it all up front. So in other words, if you have a $7,000 down payment and you didn't have those funds, you can do the down payment assistance program. They would put a $7,000 second mortgage on the house, and then you would pay that over the next 10 to 15 years. Your payment might be more like $70 a month instead of $7,000 up front. So it could be very beneficial in that regard to allowing you to get into a house. There are some down payment assistance programs that are available that are forgiven after 3 years. In other words, they put a second mortgage on the house, but you don't make any payments on it. As long as you make on-time payments for 3 years, then after 3 years, they forgive it. It seems like a good program on the front end. The problem with it is that the closing costs on it are a lot higher than the regular down payment assistance programs. And it almost makes it not even worth it because your closing costs are so high. The only way it would really be worth it is if you're getting the seller to cover those closing costs. The other reason why people aren't really using it right now is because you have to stay in those two mortgages for the full 3 years to benefit from it. Most people who are buying right now will be refinancing within 1 to 2 years at the most, because the interest rates at some point are going to drop back down, and you're not going to want to stay in the current interest rates that you have now. You're going to want to refinance and get out of that as soon as you have an opportunity to do so. You don't want to be locked in for 3 years, in other words. So that's why not really anybody's using those forgivable programs right now, even though we do have them available. So that's a little bit about how that works. So just as an example, let's say you buy a $200,000 house, down payment $7,000, you put a $7,000 second mortgage on the house. Your payment on that's going to be around $70 a month instead of $7,000 up front. The other thing you can do too, FHA allows the seller to pay up to 6% of the purchase price toward closing costs. So if you have a $200,000 house, they would allow the seller to pay up to $12,000. Chances are closing costs are going to be more like $7,000 to $9,000 on that transaction, and so you could get the seller to literally cover the whole thing if you wanted to. It's just a negotiation. One strategy we are seeing is, let's say a person has a house listed for $200,000. then you might come in and you might offer them $205,000 and have them pay $7,000 in closing costs. That way they're still getting $198,000 for the house, but you get $7,000 of your closing costs paid for. That's one strategy that's being used. Normally, if you're looking to have somebody pay closing costs for you, it works a lot better, or you're much more likely to get them to accept it if, number one, there aren't multiple offers on the house, and number two, the house has been on the market for a little while. If they just listed it yesterday, chances are they won't pay closing costs. But if they listed it a month or two ago, then chances are they're going to be willing to do some negotiations and to be creative to try to get it sold. That's kind of the key. So that's some of the information that I wanted to cover. Like I said, we have many different down payment assistance programs available. Something other people don't realize too is that you can also utilize things like a 401k or IRA retirement account and use those funds for down payment assistance, or I'm sorry, not for down payment assistance. You can use those funds for down payment or for closing costs, and they won't hit you with an early withdrawal penalty. That's an IRS rule. They count it under the same thing that you would use as a hardship withdrawal. So they don't hit you with the with the early withdrawal penalty. They will still make you pay income tax on it because it is income, but that's pretty much it. So it's a good way to help with your funds if necessary. Like, let's say you've got the down payment assistance, but the seller isn't willing to pay your closing costs or something like that. You can still draw on a 401k or IRA account and get that paid for. Or if you wanted to withdraw and not use down payment assistance and not have the second mortgage, then you would have the option to. One thing I always like to let people know is that down payment assistance is great for people who really need it, but it is more expensive for those who don't. So you don't want to use it if you don't need it, in other words, because the closing costs on it are higher and the interest rate's usually about 0.5% higher. So that's kind of how that works. Anyway, if you have any other questions or anything after this video, feel free to message me. My phone number is 615-995-2615, and my email address is tdial@nexamortgage.com, and I look forward to talking to you soon. Thanks.